Imagine waking up tomorrow morning. You grab your phone, you open your banking app. Your balance is exactly where you left it. Everything looks normal. Then, something strange starts happening. People begin withdrawing their money. Not a few people, everyone. Within minutes, long lines stretch outside banks across the world. ATMs run out of cash. Bank websites crash. News channels interrupt their regular programming. And suddenly, a question nobody expected becomes the only question that matters. If the money belongs to us, why can't everyone simply take it back? Most people believe banks work like giant vaults. You deposit your paycheck, the bank locks it away, and whenever you need it, they hand it back. It sounds obvious. It's also completely wrong, because the money you deposited this morning probably isn't sitting in your bank anymore. In fact, it may already be helping someone else buy a house, start a business, or pay for a new car. Banks don't make money by storing cash. They make money by moving it. And that's where this story begins. Imagine a small town with 100 people. Every person deposits $1,000 into the local bank. The bank now holds $100,000. At least, that's what everyone believes. But here's what actually happens. The bank knows something about human behavior. Not everyone withdraws their money on the same day. Some people get paid next week. Others are saving for retirement. Some won't touch their account for years. So instead of letting all that money sit idle, the bank lends most of it to someone else. A family buying a home, a student paying tuition, a company opening a new factory. The money never stops moving. Your savings become someone else's loan. And when that loan is spent, the money often ends up back inside another bank, which lends it again and again. The same money begins supporting multiple people at the same time. That's the hidden engine behind the modern economy. But it also creates an uncomfortable truth. The bank owes every depositor their money, yet it no longer has all of it. At first, this sounds terrifying. Shouldn't that mean the entire banking system is broken? Surprisingly, no, because under normal circumstances, it works remarkably well. Think about a hotel. A hotel with 1,000 rooms doesn't expect every guest to request fresh towels at exactly the same moment. So it doesn't keep 10,000 towels waiting. It keeps enough for normal demand. Banks work in a similar way. They don't keep cash for everyone. They keep enough for the people likely to withdraw today. Most days, that's more than enough. The system functions because our behavior is predictable. Until one day, it isn't. Now imagine someone posts a message online. My bank is running out of money. Nobody knows whether it's true, but thousands of people see it. Some decide to withdraw their savings, just to be safe. Others see the growing lines. They panic too. Soon, fear spreads faster than facts. This is called a bank run. Ironically, the rumor doesn't have to be true because once enough people believe it, it becomes true. The bank suddenly needs cash it no longer has. Not because it lost the money, because most of it has already been loaned out. Loans can't instantly become cash. A 30-year mortgage can't be collected in 30 minutes. Businesses can't repay years of borrowing overnight. The assets still exist. They're simply locked in time. And that's the real problem. History has seen this happen many times. Banks that looked perfectly healthy one day collapsed the next. Not because their investments were worthless, but because panic arrived faster than liquidity. Confidence disappeared. And confidence is the one thing banks can't print. Money moves at the speed of computers. Fear moves even faster. So why don't bank runs happen every week? Because modern banking has built several layers of protection. Governments ensure many deposits. If a bank fails, most ordinary customers don't lose everything. Central banks act as emergency lenders. When banks suddenly need cash, central banks can provide liquidity before panic spreads. Banks are also required to hold reserves, and regulators regularly perform stress tests. They simulate recessions, market crashes, surges in withdrawals, even severe financial shocks. Not because anyone expects them to happen tomorrow, but because preparation buys time. These protections weren't created because banks are perfect. They exist because humans aren't. When people panic, logic disappears. Fear becomes contagious, and every minute matters. The financial system doesn't need perfection. It needs time. Time to convert long-term assets into usable cash. Time to reassure depositors. Time to stop panic before panic becomes reality. But here's the strange part. Even today, if every person on Earth tried to withdraw all of their money at exactly the same time, no banking system could survive. Not in America, not in Europe, not in Asia, not anywhere. Because the global financial system was never designed for everyone to demand everything all at once. It was designed around probability, around trust, around the expectation that tomorrow will look a lot like today. That may sound fragile, but it's also what allows modern civilization to function. Without banks lending money, most businesses could never expand. Most families could never buy homes. Governments couldn't finance infrastructure, new roads, bridges, hospitals, power grids. Innovation would slow dramatically. Economic growth would shrink. The money sitting quietly inside your account is helping power an economy far larger than your balance. Your savings are never truly asleep. They're working somewhere else. So, can everyone withdraw their money at once? Technically, no. Not because your money disappeared, not because banks secretly stole it, but because money inside a modern economy isn't designed to stay still. It's constantly moving, constantly building, constantly being borrowed, repaid, invested, and spent. And perhaps that's the biggest misunderstanding of all. People think banks protect money with steel vaults. In reality, they protect it with something far less visible: trust. Because the world's financial system isn't held together by stacks of cash. It's held together by something far more fragile: trust. And every time you check your bank balance, you're trusting that everyone else won't ask for theirs at exactly the same time.